Thursday, April 29th, 2021, 10:32 p.m. What is today? Thursday. No, it is earnings blowout day. So we had two notable earnings reports come out, in my opinion. Number one being Amazon, and number two being Atlassian. And Atlassian is a stock that I've talked about ad nauseum on this channel. This is a company that I've been invested in for quite a long time now, and I will continue to add to my positions. So Atlassian came out with a thunderous earnings report today, reporting just over $568 million in revenue for the quarter, up 38% year over year. And also for its EPS estimates, or its actuals, came in at about 92% year over year growth, or about 48 cents a share. And on this channel, I talk about I want to invest in the companies that are growing and that are growing aggressively, but that are still profitable and that their growth rates are not only explosive, but are sustainable, right? So for example, with Atlassian, I like to look for companies growing their revenues 25% plus year over year, the quarter over quarter, right? So Atlassian, from the previous year's quarter, it's up 38%, right? So if you're a company that you're doing over $500 million in revenue and you're still growing at almost 40% year over year, that's unbelievable, right? So that means you have stickiness not only in your customers. So if somebody signs on to Atlassian products or services, or a Jira product or something like that, that means customers aren't churning, right? So they have very, very sticky customer retention. So it just compounds on itself, right? So any new customer acquisition just adds to that revenue growth. Same thing with earnings. I like to look for at least 25% plus earnings growth quarter over quarter. Atlassian just blew out almost 100%, up 92%. So if we look at the yearly estimates, in 2020, Atlassian posted about $1.15 for their full year EPS. 2021, about $1.20, and then in 2022, $1.43, right? So that's what I like to see. I like to see companies that are consistently growing their EPS and consistently growing their revenue, positive return on equity, 51% return on equity is unbelievable, and strong institutional sponsorship. So look at the March 2021 quarter. 938 institutional investors are invested into this stock. And Atlassian was up at one point almost 8% on the back of that earnings report, right? So not only did Atlassian pre-announce their earnings, they actually came out with their earnings and beat their pre-announcement, which was pretty impressive. So if we just look at this Market Watch article, I'm just going to break it down for you guys really quickly. So Atlassian swung to a profit in the March quarter, driven by a more than $100 million gain related to Atlassian's exchangeable senior notes and related capped calls, and helped by higher sales tied to discontinuation of new server license sales and price changes to its on-premise products. So just so you guys know, Atlassian is phasing out its on-premise product infrastructure. That's nothing to be concerned about, and yet that revenue will drop off, but everything is moving to the cloud, right? Businesses are going to toss their on-premise infrastructure to the side and slowly but surely migrate over to the cloud. Atlassian understands that the majority of their customers may not be ready to make that full cloud transition just yet, so they still offer those products and services on-prem just to sort of help them, switch over to the cloud piece by piece. So if we continue reading on the article, the team collaboration and productivity software company, which has seen higher demand as remote work took off during the COVID-19 pandemic, is shifting customers to cloud-based versions of its software and discontinued sales of new server licenses in the third quarter. Upgrades of existing server licenses will continue to be available through the third quarter next year, the company said. On Thursday, Atlassian reported a profit of $159.8 million, compared with a loss of $158.8 million a year earlier. On a per-share basis, it reported a profit of 63 cents a share, or 48 cents a share as adjusted. Total revenue rose $568.7 million from $411.6 million. Atlassian has projected $566 million to $572 million in revenue. Analysts surveyed by FactSet expected a loss of 9 cents a share, or an adjusted profit of 29 cents a share, and 534 million in revenue. So Atlassian totally blew out the quarter. This is a company, in my opinion, that I'm going to stay long. I'm probably going to add to my ultra long-term position in Atlassian come market open tomorrow. And this stock, in my opinion, should be at all-time record highs before the end of the summer. So lastly in this video, what I want to talk about is Amazon, ticker symbol AMZN. Amazon had another blowout quarter, and as sort of we went over before, the main thing that I like to look at with Amazon is not only their e-commerce business, but also their cloud computing business as well. Anytime you are listening in to an earnings report from a Microsoft, a Google, or an Amazon, the key things, in my opinion, that you want to look for are their cloud products. So for Microsoft, you want to look at their Azure cloud growth. For Google, you want to look at their Google cloud growth. And for Amazon, well, you want to look for the AWS, or Amazon Web Services cloud growth. So not only did Amazon report a quarter of nearly $108.5 billion, right? So up 44% year over year. But what was very interesting is if we take a deep dive into this earnings report, we'll see that their AWS cloud computing unit actually grew at plus 30%. So let's just take a quick look at the full year EPS. In 2020, Amazon made about $41.83. In 2021, they're expected to do $47.80. And in 2022, earnings are seen up 39% to $66.55. So in layman's terms, guys, if a company expects to earn $5 this year and $20 next year, you can probably bet your bottom dollar this stock is going higher. In my opinion, price action always follows earnings. Fundamentals are always at the forefront. And if you have a company that is multi-billion dollars in sales every single year, every single quarter, and they're still growing at plus 40%, that's unbelievable. That's a company that you want to own, you want to forget about it, you want to put it away in your retirement accounts, your IRAs, whatever, Roth, 401ks, whatever, and you just want to put it to the side, buy it, don't sell it, don't trade it. So let's look at this CNBC article, which I really don't like CNBC very much, but Amazon sales surge 44% as it smashes earnings expectation. So let's just look at how its e-commerce business did in comparison to analyst estimates, right? So the e-commerce giant, Amazon, let's see how it fared in comparison to analysts' estimates. So earnings, they estimated Amazon would do about $9.54. That's what Wall Street projected. Amazon turned around and did $15.79 a share, which is unbelievable. Blew out the earnings estimate. Wall Street expected that Amazon would do $104 billion in sales, which is ridiculous. They turned around and topped that at $108 billion. Let's scroll down through the article here. I want to point out something very, very important, which is their cloud computing business. So let's take a look at that. Let's see what happened. Trying to find it. Here it is. So outside of its core retail segment, Amazon's cloud computing and advertising business continued to boom. This is very important. Amazon Web Services saw net sales of $13.5 billion during the quarter, up 32% year over year. Amazon doesn't disclose advertising sales, but it's included in the company's other category, which saw its revenue grow 77% year over year to $6.9 billion. So this is the main reason why I own Amazon stock, and I'm going to continue to own it for the foreseeable future and probably allocate a larger portion of my net worth into Amazon stock, because their cloud computing business, even though it's doing $13.5 billion in sales every single quarter, it's growing at 32% year over year, which is unbelievable. That's the type of revenue growth you guys want to look for. Here on this channel, we're all about following the can slim style of investing, which is in very general basic terminology, we want to look at good fundamental businesses with strong moats, growing their revenue at least 25% quarter over quarter, growing their EPS or earnings per share at least 25% quarter over quarter, and has a good return on equity of 25% or more with very positive free cash flow and increasing institutional sponsorship. So let's check out the long-term chart of Amazon, ticker symbol AMZN. This stock is probably going to gap up tomorrow to all-time highs. I wouldn't be surprised if we pulled back here a little bit, but in essence, the trend is higher. We heard from the Federal Reserve yesterday, which is going to continue to be extremely, extremely dovish, continue to print money. The easy money is going to flow. We just came off of a banger blowout earnings season, which I think Zoom Info, which is another ticker symbol I'm really covering a lot, I think they report next Monday. Is that right? Let's check that out. Okay, so in 4 days. In 4 days. So yeah, I mean that's my overall opinion on the markets, right? You have companies that make up the majority of the S&P 500, not only reporting positive earnings, but reporting unbelievable blowout quarters. You have the Federal Reserve that is not going to tighten anytime soon. They're going to continue to keep the easy money flowing for as far as the eye can see. So why should I sell any of my equities or any of my stocks that are just coming off the backs of unbelievable earnings reports, and if not only beating their earnings, but raising guidance for next quarter? That's my opinion, guys. Let's check cryptos, and then we will call it a day. I really do appreciate you guys tuning in here. Wait, let's just check Alibaba real quick, because this is a company that I think is severely undervalued, and I think we're going to have a nice markup here soon. Looks like we had a little bit of a sell-off. This is the only thing I don't like. I want to see us break above the 50-day moving average and form a base above the 50-day moving average, and hopefully we can develop some sort of a spring and continue to trend higher. But I continue to be bullish on Alibaba. Looks like we're having a little bit of a sell-off in Bitcoin. Looks like that 50-day moving average that was once acting as support is now acting as resistance. So I am still bullish on Bitcoin in the long term, but I do want to see price action break above the 50-day and continue to hold, and then we should be able to trend higher going into the summer. Look, if Bitcoin pulls back to the 200-day moving average, I think that would be extraordinarily healthy for the cryptocurrency. Things have just been going parabolic lately, so I wouldn't be opposed to having Bitcoin sort of give a little bit of a pullback. Ethereum, which I'm also bullish on, it looks to be breaking new all-time record highs almost every day, and I'm still bullish on Ethereum. Yep, so still bullish on crypto, still bullish on equities. We just came off the backs of very, very positive earnings reports. I will be making another video on Sunday night. Hope you all are doing well, and I will see you in the next video.